Ladies and gentlemen, welcome to Only Trade to Win. Today is April 1st, 2024, and we're doing our first quarterly review for the year. One of the most common questions that I get is, why do I still do everything by hand instead of just going to TradingView summary where all the numbers are put together and ratios are already computed? The reason for me going by hand is because by the time I am done updating my watch lists, I have a really good idea about what's going on in the market, not just right now, but also in the long term. And one of the things that jumped at me was the fact that the S&P 500, see it here in blue under B, it overtook NASDAQ for the year to date. I'm going back to March, and here we can see that NASDAQ was up 9% and the S&P was up 7.5%. And if we go to March, the S&P is up by 10.8% and NASDAQ is up by 10.34%. And the rally has gotten broader and stronger for the overall market compared to the NASDAQ. And the leader for the year is still the Philadelphia Semiconductor Index, up 17.5% year to date. Also, real quick, we did a show last year on world indexes and picked the DAX, the German index, for many different reasons, and the German index is doing really well, up 10% in the first quarter of 2024. So an excellent start too. Now let's jump to our watch list for going and looking at the pictures. Column number 6, quarter, Nvidia is up 82%, Meta up 37%, and Amazon is taking third place, 20%. Now if we just look at the month, again, the leader for this month is Nvidia, and for the first time in a really long time, Meta is not taking the second place. The second place goes to Google, that had a really interesting month, way down and slowly climbing back near its all-time high. So we're going to look at the pictures really soon, but in any case, our place is our steady old Micro, still up more than 10% for the first, and two of our stocks. Apple is down 6% for the year, and Tesla is down almost 30%. And as we talked at the end of 2023 review, Tesla made a 52-week high back in August when all the indexes and stocks were making its all-time highs in January. So it stopped rallying months before the broad market, and it did not really participate in that November, December Santa Claus rally. Now for Apple, the picture is really different because Apple was the leader making its all-time highs before the general market made its all-time highs, and then it stalled. And we pointed out that December was pretty much flat month for Apple. Now it's time to go to the pictures. So we begin with the S&P 500. This low is from October 2020, and for the past 5 months, the index is going pretty much straight up 30% in the last 2 quarters alone. The S&P 500 index is trading well above its previous all-time high that it set back in November of 2022. If we look at the NASDAQ 100 index, 30% or about the same as the S&P 500 from the same November 2023 lows. Here is the picture for the Dow for the same period. 20% relatively is not as strong, but was the strongest one from the start. Look at that November and December, it had really powerful. Now we're still, this is still a really strong index. If you can see, it is not making many pullbacks and closed on the last trading day of March at its all-time high. It is also well above its previous all-time high, 2022, right here at 36,500. Now the last index that we are going to look at is Russell 2000, and if you look back at last year, Russell 2000 was, it was negative when all the indexes took off and turned positive, approaching their all-time highs. And even though its performance is about the same as our leading indexes, 26%, the picture looks really different, because if all our indexes are or near their all-time highs, for Russell, it is still 16% to go to its all-time high. So relatively, on the big picture, Russell is, you see this area, you see where it sold off from here, and every time it went into this area, it sold off. Now, finally, has closed above. This is really bullish because from here, we're looking at 2400, 2190 would be first area, and then 23.6, 2400. I'm going to zoom in. This is weekly, and you can see here is our pullback and is squeezing, and now it's at the top of this range. Let's take a closer look on daily. Okay, came into this area again, came in, tested the high, the low, and now it is sitting above this area. So they tried to sell. Russell looks really interesting, and it is definitely on the watch list for this week. And we're going to see if it can actually follow through with the momentum on the upside and head back up, continue, hopefully test its all-time high. Now, going to our stocks, I think the first one we need to look at Apple, because it is very difficult for the market to go anywhere without Apple. Here's the monthly pick for Apple, and you can see our November lows, October lows from where the market rally are here, and there was $165. Sure, barely made new all-time high. The stock sells off into this area. Now, theoretically, if it breaks this level, you look down here, there is nothing but the green bars, so it will drop down into 142 or 129 area. It breaks this level. Now, if you look at this picture of Apple and then compare it to the Nasdaq, you can see the big difference where Nasdaq is making its all-time highs this whole year, and Apple is testing a very major support area on the way down. Now, the second stock I wanted to take a look at with you is Amazon. It is currently in the third place for the year, but the stock really strong February and March, trading at its 52-week high and approaching its all-time high. The next stock is Google, and Google actually has shown some serious resilience. Here's a monthly pick for Google, and you can see that it had a really strong month, trading down to $130 share area and rating it closing about $150. Let's go and take a closer look on data. Here is end of January. The company reports earnings right after the stock trades. It's at its all-time highs. It gaps down, fans climbing up. And then we get the news that it is not doing well with its artificial intelligence, and we sell off. After getting into that $130 area, again, the stock reverses. And since beginning of March, it's been going straight up, now sitting right below its all-time high. It's such an interesting thing with Google, and Google, I think, is a really good example of having really deep pullbacks. Think about it like a really big, heavy athlete who needs to jump up, so he really needs to squat down and then boom, explodes. It's not gonna work like for stocks like Nvidia, because they have so much momentum. Here, a little bend in the knees is enough to propel it its all-time highs. We cannot disregard the volatility. 822, 662, 972, 36. Really volatile. And if we switch to Nvidia, let's just take a look and see that our champion for 2023 continues to champion 2024, reaching and surpassing the price target I set at the beginning of the year. And there are 3 or 4 videos talking about this number, and could never guess that it would be in the first quarter of this year. I thought it would take a year or so, but this is what momentum is. And when everyone is piling in the same stock, which was visible from last November, December, this is what you get. Again, Nvidia, $900 stock. Looking at the week, see that all-time high was here around $970. Last week, the stock into this 970, 967 area, and it sold off. In any case, it would be nice to get a pullback on Nvidia, because it ran up here. We were 72%. Now we are 80% after it broke up $400, $500 range. And we talked about this range a lot because this was a great opportunity. We had so many days to get in here and participate, to call 176 days, and a lot of great low risk, high reward entries. And we're looking for the same up here. At some point in time, it runs out of steam, consolidates, and it either reverses and sells off, continues with mega trend. For Nvidia, we are really looking forward to this next coming pullback. Meta, 37%, and for the first time in a really long time, it's not a number 2 performer on our monthly list. So again, it held on to annual or first quarter gain, but it dropped back, and it actually is the first month when the stock is negative in a long time. So let's look at the picture. So here's the picture of our 2020 champion and the stock that I threw in the contenders hat for 2020. Here's the famous sell-off 2022, when nobody believed the company and the CEO said it's going in the wrong direction. And after selling off more than 75%, we had a spectacular turnaround, and we are up 400% from beginning of 2020, proving all the doubters wrong and showing any beginner trader anything is possible in the market, that even the stock falls down 70%. A mega cap stock can come back and have a 400% run. And if you look at this, there is no real pullbacks. We had something in here from 320, 280. We get one pullback, 1, 2, 3 months, and it takes off. And here we are. One thing that I am noticing here, which I am a student of, is this way. This is a big wick, and we're going to watch, because this 520 area could come big resistance area. But in any case, the stock is up 430%, sitting near its all-time highs. That it's a beautiful stock, and it is our champion and one of our favorites. So where are are we now? I think the big thing on Wall Street is waiting and seeing what Fed will do. And all that depends on inflation. And one of the things that we can take a look at is the price of gold, which is making its all-time high. And the price of gold is pointing to that we are going to have inflation. And everybody knows that we are having an inflation and that there is so much cheap money flooded Wall Street, Main Street, any street in America, and it's continuing to flood the United States because it is the only last safe haven left on the planet, right? So the money is flowing into the United States and the Federal Reserve. Here are the expectations. Here is what people who put the money and make the trades, this is what they're saying. They're saying that the gold is going to all-time high, meaning that there is, from 2000, look at this, from year 2000, gold tested this price, it sold off, tested it second time, sold off, and now it's trading in the time territory. So the summary is that I would not get into any stocks. I would not chase anything here. I would wait bigger consolidation and maybe pullback. There are a lot of things in the market that are saying that we may hit recession, and at the same time the momentum is on the bull side. So I hope this kind of brings you upbeat and you understand where stocks are and where indexes are, and kind of have a very good idea on how you can do your own analysis and come up with your own decisions. Be really careful here. We had a really long and extended run on many stocks. Here is JP Morgan Chase, here is Microsoft, and here is the S&P 500. We had a really nice run from October, 2 quarters in a row, and it seems like the party's on Wall Street and nobody is planning on going anywhere. They're expecting rate cuts, they're expecting more money, they're expecting more inflation. Inflation means higher stock prices. I hope this is helpful, and until I see you next time, navigate with care. Goodbye, everybody.